webinar and looking forward to hearing from you.
Thank you, ma'am. Thank you for that warm introduction, and good afternoon, all you guys. It's my pleasure to speak to you guys, and I'm sure during this interaction it will be more of a learning for me than for you guys, because I'm speaking to brightest minds, youngest minds. So always at times there is a question whether the experience will do better or the youth will do better, and my personal belief is the youth will do definitely better than the experience. So, and you guys are more than 50, so all of you guys put together have far more creative ideas than what maybe I have to offer. Uh, I will go to the so I will try and make this as Nina ma'am and Jolly and all the colleagues as simple as possible. When you see, I have put two boxes. One on the left side is trying to say what do we need, and one on the right side is what do we need to do. I will try and keep as simple as possible such that we understand. So, and why do we need to have a smart financial goals? Because all of us want to live a reasonably good life. We don't want to live a life of a poor. None of us want to do so. So, and then there are reasons why we either lose our wealth because of the mistakes we commit. Some of the common mistakes we do is we don't take an insurance. And what is the risk here is that in case of a loss of a life, something like a COVID, what has happened, if there's a loss of life, then you run the risk of not being able to have enough money to take care after the death of the earning member. The family will not have money to take care of the needs of the family. So I have made, according to me, there are three key things which are important from a person's perspective. One is to have a social security, and social security comes with something like an insurance. What type of insurance we need? We need insurance for term life for plan, which means that in the event of a death of a person, he needs to have an insurance claim where the family can take care of the needs. The second important aspect is the Mediclaim. Mediclaim meaning if you have issues in terms of medical needs and you don't have money to pay for them, if you have a Mediclaim, you will get a reimbursement from the Mediclaim insurer, and thereby you can take care of your needs. The third is the accidental insurance. So these are the social security measures which, according to me, every person should take care of. Moving to the next important point is every person needs security in terms of a shelter to live. Just one second. So the other aspect is the in terms of shelter, and this is the other important need I would say of every person is in terms of having a home where you want to stay. So again, having a goal in mind in terms of purchasing a home or having a home is very important. The other third aspect we need to keep in mind is in terms of a long-term, short-term commitment. So what are our long-term, short-term commitment? We need to incur household expenses. We need money for education. We need to buy a vehicle. We need to have a spend for our travel and leisure and so on. Now, how do we meet the needs? How do we have money to meet the needs? Apart from the fact that all of us guys will be earning, trying to get educated, become maybe start our own business or try to get a job or a career in some company. How do we manage to save money to achieve our goals? On a short-term basis, these are the different methods which typically people do. So every person will go and open a bank account or a savings account where he will keep his money. People try to open fixed deposits which gives a fixed rate of interest with the bank. That helps you in terms of having liquid money available in case of any eventuality or any short-term day-to-day needs. People keep money in this manner. People also invest in mutual funds. This is something that has been a trend in last 10-15 years, and it's a very good mode of increasing your wealth, increasing your capital. Okay, I said earlier we need to take insurance to be because this will take care of the fact that in the event of any eventuality, you have money to take care of yourself. There are also tax-saving mutual fund investments which are available. This gives you dual benefits. One is it gives you a tax break, and also the other benefit of this is that it helps in terms of increasing your wealth, because all of these investments have different rate of return. So this will have a low rate of return. This would have a high rate of return, but there are also higher risk associated with this. So these are the different modes in which how you can invest money and try to have meet your financial requirements. Moving to the long-term requirements, in terms of meeting your long-term requirements, many people after do take a home loan to get meet their long-term requirements. Uh, so as you grow in life, you will certainly have a higher income available, which can help you in terms of taking a home loan, paying the EMIs, and then owning a home of yours if you already don't have a home. There are other investment opportunities also like provident funds and so on. And again, this equity mutual funds can be done not only for short term, this can also be done from a long term perspective. Okay. So this is what typically, and it is very important that every person understands the importance of matching his responsibilities and sources of meeting these responsibilities. Everyone will have limited sources of meeting his responsibilities. I don't think people would always have a lot of wealth inherited that he can buy a car, he can buy a house, he can go for leisure trips and so on. I don't think we all have unlimited supply of money. We always have limited supply of money. So we need to use our money very carefully and we need to invest our money very carefully. Okay, it is very important that we have a habit of saving from a very young age. I don't know, all of you guys are in 8th standard. So you guys must be getting some amount of pocket money. I'm sure you must be having habit by now of having a small, at least मेरा तो था मिलर जैसा छोटा होता था and I used to like it was the most precious thing I ever had in my childhood because we used to put those coins in that miller. It might be 100 rupees during those days, but 50 rupees during those days, but that 100 rupees, 50 rupees also had a lot of value. Matlab, even today, I feel that the 100 rupees saved during those days was worth like being a millionaire at that point in time. So I'm sure all of you guys must also be having such a good habits in terms of saving money. But as you grow in life, you need to improve your ways and means of saving, investment, and becoming more richer. You have to work hard to earn money and also invest your money wisely, save your money wisely, spend wisely. That is very important. That prudence or being a wise person as a finance guy is very important. Financially being wise is very important. People will come and try to fool you. They will say this investment will give you 40% returns in one day. All these Ponzi schemes you should not get into. You should follow the traditional systematic way of making money, which people have been doing. And all of these principles which I have written here, you can safely assume that these are the principles which are wisest of the men. How many of you, I don't know how many of you guys have read or heard about uh, uh, people like Warren Buffett, Bill Gates, Mark Zuckerberg. All of these guys have followed his basic principles in life. And they have followed this even after becoming rich. So Mark Zuckerberg, we all know, is the owner of the Facebook. Never ever has any news come in public domain where he has just wasted money, spoiled money, bought lavish cars. He will never do that. He will never waste his money because it's a hard-earned money and he will always live a simple and basic life. So these are the basic principles in life, and this is something that I have written over here. These are something that I follow, and this is something that I have observed all the rich people, successful people, financially wise people follow. Okay. If I go to the next slide, quickly I will explain what are the 4 important components of finance. You need to understand this when you say, because here we talk about goals, short-term goals, long-term goals. Now you need to understand some one more important aspect, that is what are the 4 components of finance. So the 4 components are, one is the liabilities and then is the assets. Okay, all your long-term liabilities and long-term assets, and then you have something like an expense which is for less than a year, and then you have income which is for less than a year. Okay, so let's say this is what is, you guys are working as a let's say you start a business. So if you have a business, then what you need to understand is this is the 4 components you need to understand. Your business will have incomes and your business will have expenses. Okay, now what you need to understand is whatever business income you earn, you need to spend in terms of you need to incur certain expenses. Even if you start a small business like IT repair shop, there are certain incomes you will get. You will need to take care of your customers. So for that you will incur expenses, and if the customer is satisfied, he will pay you money, which is your income. Okay. One of the good habits you need to have when you are earning an income over your expense is that you invest and earn an investment income. This is very important because in the months where you don't have income, something like a COVID which you have seen, there are many families which are not having income. The investments help you in terms of meeting by getting the investment income. You can meet your day-to-day expenses. You can still survive during these difficult times. So this is something that you should always keep in mind. The other aspect you need to keep in mind in terms of assets and liabilities. I will go to this section now. Assets and liabilities is that you need to have a capital. Capital meaning something that is a surplus or a wealth that you have. Now this capital is built over a period of time by whatever savings that you do, whatever gifts that you get, you build a capital over a period of time, and you should wisely invest it, keep it in a bank, or you should invest in some investments. You should invest in properties. You should invest in vehicles. Okay, all of this you should be doing very wisely because these are generating revenues for you, but you should be investing very wisely and ensuring that they are a wise decision in terms of your investments. I will move to the next part. Now, for all of this to do, the most important principle for achieving your financial goals is to plan. Okay, this is the most important word you should remember in life. Plan. You should have a plan. You should have a dream and you should have a plan. Okay, why do you need to have a plan? To achieve your financial dreams, you need to have a plan in place, because without a proper plan, you will never be able to achieve your dreams. Okay, and you should, when I say a plan, budget or a plan. So when I said in my profile, I do a planning MIS, this is what we do. We continuously budget, we continuously plan. We make plan for short-term goals, we make plan for long-term goals. This is what we keep doing time to time. Okay, one of the challenges we face in a current world which we live in is why you may make a plan, but there are challenges and therefore you need to reassess your plan. Okay, you also need to keep in mind certain contingencies like what we are seeing right now, COVID kind of, where there are difficult times. So you should keep adequate liquidity such that your plan doesn't go for a toss. Let's say you invest your entire money in long-term goals, which will give you money after 100 years. You will find it difficult to liquidate that money and survive in the present. Okay. So far, anyone has any questions, or ma'am, should I go with the flow and then maybe take questions at the end? How do you want to do it?
I think it's best if we take questions at the end, sir. Sure. I have muted everybody. Everyone's mics and cameras and chat is off for now. So we'll take it at the end.
Sure.
Great.
Okay. Welcome, ma'am. The other thing I wanted to highlight to you guys is creating a budget for your idea. Okay. So whatever ideas you have, and this is the most important thing, you might have ideas in terms of doing a business, you might have ideas in terms of doing a career in say engineering or whatever. Okay, you need to have a proper budget in place. Okay, when I say budget, you need to, as I said a few slides above, you need to think in these terms. What are your liabilities? What are your assets? What are your expenses and what are your incomes? Okay, when you make a budget, you need to be clear. The first thing you need to do is where will the money come from? It can be borrowing, you can borrow, or you can have your own money which you have in terms of equity. So you could have wealth which you inherited, or you might have to borrow some money. Equity can come to you from your parents. Parents can gift you something, or you might end up borrowing from your parents. One of the ways how you get your funding requirement is also borrowing from a bank. So at this maybe some of the schemes which governments come up with, in terms of government also come up with schemes in terms of Jan Dhan Yojana, government guaranteed schemes and so on. So there are also ways and means where even a smaller MSME or what you call micro, small and medium enterprises can get sources of money in terms of borrowing and equity. Okay, you need to break these requirements into what is the short term and what is the long term requirement. And then you need to break your further beyond this, you need to see what would be your sources of incomes and what would be your sources of expenses. I just need some time. Okay. Apart from this, the other important aspect which you need to look at is what are our fixed costs. Okay. When I say it is expenditure, you need to be sure what are your fixed costs and what are your variable costs. Because fixed cost is something that, let's say you decide to start a shop where you want to sell clothes, you will incur a fixed cost, but if there are no incomes, you will make losses in initial period. So you should be conscious about your fixed costs, what you are going to incur. Okay. Again, your sources of income. Okay. Now you might start with a business where you are doing it as a proprietary business, where you yourself are doing it alone as a business. But you need to look at what are the sources of incomes from time to time. Okay. For example, you might be getting certain incomes. So in case of a finance thing, the income is in terms of interest income. But in case of a business, in terms of being a trader or something, you will have a income in terms of fee, commission. So depending on what type of business, you will be generating incomes. You also need to look at, now you might start with a particular type of business, but you also need to look at opportunities in terms of improving your network. Okay, so because today you might have 10 customers, but if you have to grow your business, you need to have better network. You need to have better reach. Internet is also a good source where you can reach out to multiple customers across the globe. So your customer base widens. So this is what you should look at when you're having a business idea. The other thing you should keep in mind is the most important thing is the innovation. Okay, how can you innovate? How can you use information technology to reduce your cost and improve your income? This is the one ratio which you should remember in life. Cost to income means you should reduce your cost, okay, and you should increase your income. Okay. The other aspect you need to keep in mind is regarding costs. Okay, you should do these 6 principles. You should always do what is your pilot project cost. You should incur costs on a pilot basis and not straight away go and start incurring larger costs, and monitor them. The second thing is you should be spending, if you want to do a business, you should be spending on innovation and research. Okay, you would also be spending on marketing, branding costs and so on. Okay, then the other thing you need to keep in mind, this is very important, is what are your discretionary costs. If your discretionary costs are controlled, then what will happen is you will have lower costs. As I said earlier slide also, you need to look at what are your fixed costs and what are your variable costs. Okay, apart from this, when you're doing a business, there are certain costs which are directly linked to the business and certain costs which are administrative in nature. So for example, if you're opening a shop, okay, and you're trying to be a shopkeeper, you will have certain admin costs. You'll need certain people who will do your accounting job, certain people who will be managing your shop and so on. So you need to be clear about what are the different types of costs you're going to incur. Okay. How to design so this is important thing with regard to the costs, which typically any organization does is it identifies what are the one-time types of costs they will incur. They also identify what are their fixed and variable costs. They identify what are their discretionary costs, and they also look at aspects such as automation and artificial intelligence to improve their productivity and eliminate the cost. Okay, there is a concept which is known as manpower productivity. This means that you look at the people you are deploying. Okay, so you look at the productivity of the people whom you are deploying. Okay. The other thing is be very cautious about the debt equity. What this means is that how much of borrowing are you making? You cannot borrow excess. This debt at any point in time should be lower and you should have higher equity, because that will ensure that you are not over leveraged. Okay, and then the most important principle, as I said at the start, have a liquidity for difficult times and always have the discipline of paying on timely basis to ensure a good credit score. Okay, because this will help you to raise credit for your business. Okay, this is something that is monitored these days. What you call as a CIBIL score. So this is very important to have a good CIBIL score these days. If you want to get a credit card or you want to get a bank facility or you want to get a loan, this is a very important parameter to have a good credit score. Okay, moving to the next slide. In terms of ideas, so the previous slide I talked about how to assign, what are the basic disciplines when you're doing a business. Now, in terms of generating revenues, how does a large organization ensure that they are constantly generating revenues? They always look at new access of revenues. Okay. They also look at opportunities of innovation. They also look at their supply chain management, which is vendor management, and also look at customer sales and services. The other aspect which is important is in terms of how do you reach more and more geographies. Whether if you're based out in a city, how do you expand it across cities, across countries, across globe? This is what they typically look at. And they also go to go digital for higher customer access. This is something, this is a gift, I would say, of internet. Internet has helped us to go digital in terms of customer access. Okay, it is very important to do a proper tax planning. Okay, so there are a lot of tax benefits which are available to both to the individuals and also to the businesses. This, if it is done efficiently, it can help you to improve your profits. Debtors turnover ratio typically means you ensure that you are, when you're selling, you're getting your money back faster, which would mean that you are earning more for the amount invested. These are the common metrics which are available, which are commonly looked at when you're doing an investment in equity. You look at the EBITDA of the company, you look at the debt equity of the company, and you look at the ROE of the company. Okay. The last and the most important advice is be an intelligent investor. Okay. I am done with most of my important part of the presentation. If you guys have any questions, I am happy to take those questions.
So for those who have a question, I'm going to enable the chat. In the interest of time and Mr. Raikar's time, we'll only take limited questions. So if anybody has a question, please do type it and I'll read it out. I'm sure there are lots of questions. It's just that okay, so we are sort of getting a few questions. So there's Gurmanjeet Kaur who has asked, what is discretionary cost?
Okay, so discretionary cost, it's a very important thing you need to understand. Let's say, if I put very simply, you have a choice in life to spend. Okay, it's purely your choice. Now, let's say you have your parents are ready to allocate 2 lakh rupees for you. Now you can decide and say that I want to spend this 2 lakhs to buy maybe a computer for my education, or you want to spend it for your education. Okay. Or you can say that no, I want to spend this money for my entertainment, for my leisure. I want to go on a travel trip. I want to go on an adventure trip. I want to buy a bike. Okay. Okay, so it's a choice, or you want to buy a luxurious iPhone. Okay, now that is the choice we need to make in life. What are your choices? So for example, when we were students, I'm talking about myself, we also had those challenges. There were limited choices we had. But so I particularly remember, if I can give one example of discretionary cost, I remember there was a choice I had to make. I could have requested my father for a bike, or I could have requested for a computer. And I went for a computer because I thought that would help me in terms of my studies. So that is a discretion I made. That's the choice I made. And that's what you mean by discretionary cost. You have to make a choice what is important for you. So when you have money in your hand, you have to make a choice whether you want to spend that money and maybe enjoy it, or you want to invest. And even when you're investing, you have to make a choice when you're making investing. When I said discretionary cost, I specifically meant choice being made between what cost is important and what cost is not important.
There are several more questions, sir, but I'll screen them. So for all of you who's asking questions in respect to what is an admin cost and
there is one interesting question as to the, okay, I will take few of the interesting question. What do you mean by mutual funds? Mutual funds mean there are certain mutual fund houses which invest in equity stocks of large cap, mid cap and small cap. Large cap meaning large listed companies So there are companies, they invest in the listed companies. Large cap means the top 50 NSE shares or top 20 BSE shares. They invest in those large caps, and the shares based on their market valuation is treated as large cap, mid cap, small cap. They invest in such shares, and based on their investments fluctuation in the prices, the NAV of the mutual funds go up. They regularly monitor their investments. If they see any risk in investment, they will sell. If there is any dip in the market, they will buy more. Okay, so I think you guys, when you guys should also look at options in terms of investing in mutual funds at appropriate point in time. You should preferably invest a lot in debt mutual funds. Just 1 minute. So it's a very good option in terms of improving your value of the investments. And this is a very important term. The other positive about this is you're not directly exposing yourself to the stock markets. What is equity? Equity means the simplest way of equity is your wealth. What you have. So suppose it's your own contribution to business. That's what equity means. Okay. So,
Sir, if
where
I
you
may,
not pay to someone, it's your own contribution which you have to a business. Okay.
So just for the students who are asking about equity, assets and liabilities, the module on DhanGyan, it gives a very nice explanation on what are assets, what are liabilities, and how would you evaluate equity. Please do take a look at that. I think a lot of questions on cryptocurrency, more so because of the.
So cryptocurrency, ma'am, the simplest thing I would say about cryptocurrency is currently government has not wholeheartedly accepted the cryptocurrency currently. We should wait for RBI and the government of India to come out very clearly in terms of whether it is a right way of investment, how it will be moderated. Always look at safer sources of investment which are promoted, moderated. So insurance, mutual funds, equity investments, investment in bank, FDs, all of these are promoted by government of India. All of these are promoted by SEBI. All of these are promoted by all the regulators. So always invest in instruments which are blessed and promoted by the regulators. Never ever try to venture out in areas where the regulator himself doesn't allow or ask you to refrain from investing in. That's my simple belief about cryptocurrency. I personally would wait to government to come out with clear regulations about it.
Yeah. So somebody asked the full form of NFTs. They are non-fungible tokens. I think all generic questions. What is the best way to invest in stock markets? There is going to be another set.
What makes a successful businessman?
Businessman, yes.
So I will give a few examples. I would make a few recommendations. All of you guys must read about Steve Jobs. All of you guys must read about Warren Buffett. You guys must, those who are interested in investments in mutual fund, you should track and follow Mr. Nilesh Shah, who is the, I think, MD of Kotak AMCs. So then there is Mr. Jhunjhunwala, Rakesh Jhunjhunwala. He is the Indian avatar of Warren Buffett. You should track these guys who are very sensible, who have been. So Mr. Jhunjhunwala started investing when stock market was only 100 points. He started with 100 rupees of investment out of his pocket money. Mr. Warren Buffett started investing at the age of 11. Okay, and he said that it's too early, too late a age to invest. So you guys can understand the importance of investing early. Okay, it only helps you to create wealth. A share like TCS was not even discussed about in 2000. Today, it's one of the most valuable company 20 years hence. So whatever good investments you do today, it will give you a lot of wealth after 15 years, 20 years. If you keep a long-term goal in mind. So investment is like a child. You have to, if you want a child to become a good human being, you need to give time to that child. You need to nurture that child. You need to guide that child. If the child gets digressed, you need to bring him back on track. Same is with the investments. You need to look at an investment just like a child. That's the simplest example I can give you. how to invest in stock markets, you need to have a demat account. Company valuation, there are two things. One is the book value. The book value of a company is a function of the assets over liabilities. And then valuation of a company, market valuation is then a factor of the market PE multiples which the market applies to a shares. Okay.
I think so. We covered almost all the questions that we could have. Disabled chat because there were a lot of questions that were also coming in.
How can we become an intelligent investor? Shivam Shukla, please read about Warren Buffett, Intelligent Investor. There is a book by that name. Please read about Steve Jobs. These are real life examples of most successful people. You can read about how Mr. Dhirubhai Ambani was an employee at the age of 25 with a handsome salary, decided to give up his job and start his own business. And there were quotes during those days that you need generations to build an empire. And he had a dream that he will build in his one lifetime, and he actually did it. So you please read about such motivational people. They will give you a lot of motivation, a lot of courage. They will give you a lot of insights in terms of how people become successful, how people stay focused. Greed is so there is one phenomenon when you invest in market, they call as a greed versus fear. So when the market is gripped with greed, the new investors enter the market like crazy. Okay. And that is the point in time where the intelligent investor stays away. Okay. When there is fear in the market, the intelligent investor starts buying. So if the markets are just jumping like anything, the intelligent investor will not invest in that market. But when the markets are falling, the intelligent investor will invest in the market. So you should know when the market is gripped with greed and when it is gripped with fear, and accordingly take your moves. The second thing you should keep in mind, never sell your long-term assets to meet short-term liabilities. Always plan your assets, plan your liabilities. You will have liabilities in terms of education, you will have to spend for your leisure, you will have your personal commitments in life. You should plan it well. One of the, I think someone was asking about a home loan or a house. It is very important that you try and have a dream of owning a house. There are various prices at which houses are available in India, across India. So in smaller cities, it might be even 20 lakhs, 30 lakhs. And there are a lot of government schemes which helps in terms of buying a house, in terms of economically weaker sections and so on. And then there are a lot of tax breaks if you take a home loan against the house. So you should always have a dream of making investments, and you should make investments wisely. And you should also have a dream in terms of owning a home. Those tax breaks are also very good, which the government gives. And then there are additional tax breaks in case of a person who is investing in value of a house which is lesser than say 50 lakhs. So there are a lot of such opportunities available. If you want to find areas how to invest, you yourself will have to do some research. Start with mutual funds. The basic thing you can do is start with basics. First basic step in life is to start learning to save. Then second is you learn to invest and start with the safest form of investment, like having a bank account, like having a savings account, having a FD. Then you start with slightly more riskier, which is mutual funds. And then you start with slightly more riskier, which is equity. That is how you should go step by step and do it. Okay. You can't straight away get into equity, and never ever fall prey to schemes which says कि आज मुझे पैसा दे दो, कल सुबह मैं आपको डबल करके दूंगा, ट्रिपल करके दूंगा, एक साल में दूंगा. Probably he'll take your money and never come back and give it to you. So be aware of such Ponzi schemes. That's the limited thing I would like to tell you guys. I think I have tried to answer most of the questions from my side. If there are still some questions, you can definitely write back to me. I will certainly try to answer them. Yes, ma'am.
Yes, I only want to conclude by saying is there's no, just like how Mr. Raikar said, there's no quick rich scheme. There's no scheme in which tonight, you plan to do something and tomorrow you will get loads of money. This requires a lot of planning, research, hard work, and you also have to be committed to it. So this course of DhanGyan will give you the basics of it, but of course, in order to improve your knowledge, there are a lot of resources available. Be cautious and careful as far as the internet is concerned, because internet is a sea of information. Some of it will be handy and will be worthwhile. And on the other hand, there's also a lot of other information on the internet which might have these quick schemes which you should not fall for. So being students, just be careful. Now, in terms of any other questions, if you have, you can please direct them to us and we will try to get them answered from Mr. Raikar. Tomorrow, as you already know, we will have another webinar, and this time the webinar will be on the subject of insurance. So same time, same link, and we will continue with insurance. So as you know, we have 4 of these webinars. Tomorrow is going to be insurance, and then we take a break on Wednesday. Thursday and Friday are the other 2 webinars. It would be helpful if you would have gone through the material on the DhanGyan portal, because that forms like a basis and you will be able to relate to the content that's being discussed a little better. Apart from that, I think that's all that we had. We'd like to thank Mr. Raikar very much. Appreciate your patience as well. I'm really apologetic on behalf of the students for this little mishap. We truly value the time and the knowledge that you shared with the students today. So I'm sure everybody joins me in relating that to you. Thank you once again very much, sir. Hopefully, if there's any question which is a little too complex, we'll email it to you and pass it back on to the students after.
Sure.
Yeah. Sure. So have a great evening, sir. Thank you, everybody, and we'll see you all tomorrow. Hopefully, a little bit. Whoever was doing that little, muting, maybe has learned a lesson, or at least I hope so. And hope you've learned and had key takeaways from this conversation. We'll see you all back tomorrow. Have a great evening. Stay safe, everybody.
Thank you, ma'am.
Bye. Thank you, Mr. Raikar. Thank you so much.
Thank you, everyone. Bye, students. Thank you.